Afternoon, everyone. Welcome to the 27th January. This is Monday for Market Monday Picks. This is Jarek Seed. With Chinese New Year coming up, I'm hereby wishing you good health and prosperity for the year ahead. Trump seems to be keeping his words on tariffs, with Colombia being hit, after it blocks the US migration deportation flight. And the Chinese have also stunned the world with DeepSeek, showing that they can do more with less resources and have caught up with the US on AI development. The top area of this week will be CSE Global, which I will share more about it later. We will first start with Husseini, who will share more on his Hong Kong marketing takeaways on ASEAN TMT, and then he will follow up with his view on ASEAN data center and how new US export controls will impact the market. Next, I'll give a brief run through on why Krishna remains bullish on both MLT and FCT. And lastly, I will share why am I remaining to be bullish on CSE. Let's start with ASEAN. Husseini, can you share more about your key takeaways for the Hong Kong marketing?
Yeah. Hi, Jarek. Thanks for having me on the show. So we met investors in Hong Kong to discuss our ASEAN telecom and internet year ahead outlook report. Within the internet space, investors were more interested in C Limited, and it was driven by optimism of further increases in seller take rate and potential upside from their newly launched game, Free City. Although there were some questions on valuations, as the stock has re-rated more than 100% in the last 1 year. Second area of discussion with the investors was on data centers. So there was a considerable concern about ASEAN data center demand due to the US control on advanced AI GPUs and its impact on downstream sectors such as construction. However, we believe that the impact will be relatively muted, and in fact, we see some room of optimism in ASEAN as China's access to GPU are curtailed. And finally, within the telco space, Singtel and TrueCorp in Thailand drew interest from investors. Questions on Singtel were mostly centered around potential increase in capital return. We do see potential for higher capital return, likely in the form of share buyback. And this is based on our analysis that Singtel, if assuming that Singtel hits its capital recycling target of 6 billion SGD, then they will be left with around 4.3 billion in excess capital even after paying dividends. And that 4.3 billion excess capital can be channeled as capital return in the form of share buyback in our view. So we maintain our buy on Singtel.
Got it. Can I also check with you, basically, would C or Grab be a better pick in your view?
We have buy on both the names, but prefer C over Grab. For C, two key factors to watch. First is that e-commerce seller take rate in ASEAN is on the rise, given stable competition, and it is increasing across the board, not just for Shopee. Even Lazada and TikTok Shop are increasing their seller take rate. Also to note is that ASEAN take rates are on the lower end of the global average, and that creates potential for sustained increases. Second potential upside to look for C is Free City game, which was recently launched, and it is a GTA style game but for mobile version. It is in the soft launch right now, but the initial reviews are encouraging. So if the game is able to make a mark, we think it creates further upside. We also like Grab, and what we see is that Grab is also seeing elevated growth as consumption is stable and macro environment is favorable. However, C Limited offers more and clear catalyst in our view.
Got it. All right. So moving on to ASEAN data centers, with the new US trade restrictions, ongoing globally, Do you see any impact on ASEAN data centers?
Yeah, sure. So maybe let me give you a bit of a background. So US has put AI diffusion framework recently, and thereby it will restrict or restrictions are put on exports of advanced AI GPUs. Under those restrictions, ASEAN is categorized as tier 2 market, which in turn limits access to advanced GPUs and AI model training and deployment. This has raised concerns that it will impact data center demand in ASEAN. We think that the impact is likely to be limited and rather see potential areas of optimism. So few things to note. First is that while AI provides long-term growth optionality within ASEAN, but we see that the medium-term growth is driven by ASEAN catching up on traditional data center demand for cloud computing or storage. We estimate that ASEAN is almost 55 to 70% behind elevated markets on data center infrastructure, and that creates a long runway for growth. Second, if we look into the details of the restrictions, US restrictions, we think that they are adequate enough to meet the announced investments in ASEAN. There is a country cap of 7%, but the announced investments by hyperscalers are in the 2 to 3% range per country, and as such doesn't breach the country cap. Third, there is also a cap of 690,800 equivalent GPUs that a non-ASEAN headquarter company can access over the next 3 years. And we think that the investments to access those many GPUs is going to be $17 billion per company. We don't think that any of the ASEAN companies have such a large investment pipeline. So net, long story short is that the restrictions are adequate enough to put any limits on the anticipated data center development in ASEAN. On the other hand, we see potential for optimism as greater demand for GPU as a service in ASEAN. There is a potential demand for higher or GPU as a service in ASEAN if access to GPUs to China is curtailed. So that creates potential optionality for ASEAN.
Got it. So do you think that AI will still be a strong push for more data centers in ASEAN?
Yes, on the back of that, yes, we do think that the US restrictions are unlikely to impact. Mostly the data center demand is traditional one for cloud computing and storage. And we just hosted a data center expert at 10 o'clock this morning. And he had a similar views that ASEAN almost has, at this point in time, almost 90 to 100% driven by traditional data center, and GPU as a service is over the medium to long term. So advanced GPUs will be over the medium to long term. So he was of the view that it is unlikely to impact the demand for ASEAN.
Got it. Thank you so much, Hussaini. Next, we'll move on to FCT. Occupancy remains strong at 99.5%, while tenant sales for the quarter grew 2.5% year on year. Rent reversion is also on track in line with last fiscal year at 7.7%. Gearing rose slightly to 39.3%, and debt cost dipped slightly to 4% from 4.1%. Krishna maintains buy with no change in estimates and a target price of 250. The yield is currently at about 5.7% for FCT. He also remains bullish on MLT. DPU dipped slightly by 1.2% Q on Q and 11.1% year on year, but he remains bullish as he expects continued recycling, continued divestment of assets, and moderating headwinds in China, as well as a relatively inexpensive valuation. Yield is around 6.3% at current price levels. Lastly, for CSE, our top idea of the week, basically we think that, all stars have aligned because of Trump coming on board. Basically, he started 2 key projects. One is Drill Baby Drill, where he wants to increase US production of oil and gas and wants to be the main supplier to Europe in terms of gas as well. So we do think that there's going to be a lot more projects upcoming and also like projects involved like LNG terminals and stuff like that. So that will actually be quite a big benefit for CSE. I think CSE back then was quite big in oil and gas, but they pivoted away from oil and gas projects because in the US these projects came down significantly after the oil price crash, and they pivoted to electrification. And they won a lot of projects on that front. So with oil and gas coming back, basically now, there's another new stream of revenue, potential projects coming in again, and they can actually pick and choose their projects with better margins or better payment terms going forward, because there's so many projects for them to win, and they can actually, choose what they want to do and be more selective going forward. And next, Trump also announced Stargate, which is about a $500 billion investment into AI infrastructure in the US. We believe that this will also be hugely beneficial to CSE as it fits its data center projects front. Basically, they currently have one big customer in the US, and they are actually qualifying for two more. They have also announced that they are expanding their capacity in the US by moving into a larger factory, and that should be up by 2027. And the new factory will be about 2 to 3 times larger in capacity than its existing facility in the US. So with that, they are able to actually upsize the number of projects they do going forward. And with Drill Baby Joe and Stargate, this will actually put them in a very good position to capitalize on the upside of revenue and new projects coming in. And we do believe that with this better margins project will come, and all stars are actually quite aligned for CSE. So with that, we actually maintain buy with our unchanged target price of 64 cents for CSE. So basically, that's all for today. We have a 6 February virtual call with AIMS APAC REIT. So feel free to sign up for that. Thank you for your support, and have a profitable trading week ahead.